Good morning. Welcome to AMRO's press conference on the launch of our 2024 ASEAN+3 Regional Economic Outlook, the AREO. I'm Daisy Wong with AMRO's communications team. I will be your moderator. Let me first introduce our speakers today. Next to me is AMRO's Chief Economist, Khor. Dr. Khor is responsible for overseeing and developing the work on macroeconomic and financial market surveillance of the ASEAN+3 member economies. He is also a member of AMRO's senior management team. With us also is AMRO's group head and principal economist, Alan. Alan leads the regional surveillance group and is one of the lead authors of the AREO report. Shortly, Dr. Khor will present the highlights of the latest outlook for the ASEAN+3 region, which is chapter 1 of this flagship report, after which Alan will provide an overview on chapter 2 of the AREO, which covers major structural shifts faced by the region and how to navigate them. We will be taking questions after their presentations. For journalists joining us online, please send us your questions using the checkbox in WebEx located at the bottom right corner of your screen. For journalists in the room, please raise your hand if you would like to ask a question. One of my colleagues will pass you the mic. And before we start, let me thank all of you for observing the embargo requirements of the AREO report. The embargo has just been lifted at 10 a.m. All right, so without further ado, I now invite Dr. Khor to brief us on the latest outlook. Dr. Khor, please.
Thank you, Daisy. Good morning, everyone. Thank you for coming to our press conference for the launch of our AREO 2024. Some of you may have been here before. So this morning, I'll be presenting the chapter 1 on the conjunctural issues, and my colleague, Alan, he will present on chapter 2 on the thematic chapter. Okay, so this is a brief outline of the presentation. Start with the developments and outlook, and then followed by policy recommendation, and then there's a special feature that I'll discuss on scarring, and then our key takeaway. So I'd like to start with these two charts. This chart basically provides the growth profile and the inflation profile for the region. As you can see from the chart on the left-hand side, which is the growth profile, the region is sort of expected to strengthen this year. So that's the blue. Let me see. I hope I can. Oh, yeah. There you are. Okay. Yeah. So this is where we are last year, and we expect growth to strengthen to 4.9% this year. So this year we are much more optimistic about the regional outlook, and then we expect growth to basically be sustained going forward. On the other hand, inflation is expected to continue to moderate, as you can see from the chart on the right-hand side. So this is a detailed breakdown of our growth forecast by country. Again, you can see that growth is expected to pick up from 4.3% to 4.5%. And much of that will be from the ASEAN countries, 4.2 to 4.9%. And then we have the individual breakdown. Similarly, for the inflation, you can see from that it moderate from 6.3 to 4.3. And if you exclude Laos and Myanmar, it will go down for the whole region, for the +3 from 2.3 to 2.1. And then from the ASEAN countries from 3 to 2.7. So we are seeing actually a strengthening of growth and a moderation of inflation, which is a very favorable outlook. So we also look longer term, and this chart basically shows our long-term forecast for the region. Again, you can see that basically after the strengthening, we expect growth to be sustained through the end of the decade. And this is for the ASEAN countries. This line is for the ASEAN+3, and below is the global growth. So the region is expected to perform at a higher growth rate than the rest of the world, and we expect to be one of the main drivers of global growth. So our estimate is that it will contribute about 45% of global growth from here to the end of the decade. And these three charts shows development in external demand. The left-hand side chart shows the semiconductor cycle. The semiconductor cycle basically bottomed out last year and is strengthening. So we expect that to continue through the end of this year, and that should provide a boost to growth. In the middle chart, we shows the driver of consumption in the US. The red line is the consumption of goods, and you can see the goods consumption was relatively weak last year, but this year we expect goods consumption to pick up. And because of that, the demand for imports of goods will be much higher, and that's good for the region because the region last year suffered because export of goods was very weak. And then on the right-hand side is export of services. The green line in particular is for tourism, and you can see that it has already spiked up and reached about 70–80% of what it used to be pre-pandemic. But we expect that to continue this year, so that will be another driver of growth. So that's the reason for on the external side. And then on the domestic demand side, you see the red bar, those are the consumption component of GDP, and the gray is for investment. So last year, growth was pretty much driven by consumption and investment, right? The blue bar that you see there, the small negative blue bar, is for net export. So last year was a bad year for the region in terms of export of manufacturing. And then on the right side is investment. You can see the investment is beginning to pick up here in the last quarter. And there was a decline for the +3, but it has sort of bottomed out. And the reason we are relatively optimistic about consumption is because the labor market has been very strong. So the left-hand side chart shows the unemployment rate and how it has come off the peak in 2022. And now it's fallen below the pre-pandemic level and even or at about pre-pandemic level. On the right-hand side is the labor force participation rate. Again, you can see that has increased for most of the countries in the region. So the labor market is pretty strong, and income is growing, and that's why consumption has been relatively resilient. So these two charts shows our inflation profile for the region. This one is the red line is for the region, and the blue line and the other line is for US and OECD. You can see that inflation sort of peaked in 2022 and it's come off the peak, although the core inflation, which is the dotted line, is moderating at a slower pace. But still, inflation in the region is at a much lower level than in the advanced economy, although now they're coming off to about 2%. We did a study of the contribution to inflation from supply side and demand side factors. So that's the chart on the right side. So the red bar are the supply side factors. And you can see that supply side factors basically increased during the pandemic years and it's come off a little bit. But demand side factors are also very important. Those are the gray bars that you see there. And because of that, our view is that monetary policy also needs to remain fairly tight until inflation has come off and reached its inflation target. So some of you may be familiar with our risk map. We have reformatted the risk map. So this one now shows the likelihood and the impact on the x-axis, and you can compare the risk in terms of likelihood and impact. So we've identified 4 major risks. So they are spike in commodity prices, weaker growth in China, spillover from the US election, and then a sharp slowdown in US and Europe. And as you can see, most of the bubbles are on the lower left side, which means that the one at the bottom are basically tail risk. And the one in the middle, you can see there is a spike in commodity prices. And that's mainly because it's very much driven by geopolitical events, and that's very unpredictable, as you know, and it can happen. On the other hand, the risk of a sharper slowdown in US and Europe, especially the US, is now much lower. Although if it does materialize, the impact will be quite high. On the right side, we identify some of the challenges and longer-term risks facing the region. And let me just mention 3 of them: the geo-fragmentation, aging population, and then there's the digital technology. So those are the ones that we basically study in our thematic chapter. So let me come to the policy policy assessment. The bars on the left-hand side basically are for fiscal and monetary policy. And you can see from the second bar that it's either orange or gray, right? So that means that fiscal policy is either contractionary or neutral. You know? And so countries have moved from expansionary to either neutral or contractionary stance. Similarly, on the monetary policy side, you can see that it's becoming more orange and gray. And some countries still have a more expansionary monetary policy, but most of them are taking maintaining a relatively tighter stance because partly because the U.S. Interest rate is still fairly high, and I think a lot of central banks are waiting for the Fed to move first. On the right-hand side, basically shows the increase in public debt. So the bars have, as you can see, it spiked up quite significantly during the pandemic, and it's now, for some countries, about 20% above pre-pandemic level. As I mentioned, we did a study on scarring. 2 years ago, that was our thematic chapter, the impact of scarring by the pandemic. So we decided to look back and see how it has affected the growth in the region. So on the left-hand side, you can see 2 bars, the red and orange, and the blue. And the blue bar is lower than the red one. So the red one is pre-pandemic growth rate, and the blue one is post-pandemic, and you can see it's lower. And that's basically the scarring effect. On the right-hand side, we show the impact on different component of GDP. So the bars are basically where those components are relative to pre-pandemic levels, not growth. Okay. So you can see that the blue one, which is for investment, capital formation, was hit very badly and is still about, for some countries, about 30% below what it would have been if there were no pandemic. So capital formation was badly affected because of the shutdown during the pandemic, and they have not fully recovered. Even if the growth rate has recovered, you have to go faster in order to catch up to pre-pandemic level. So what that implies is that, production capacity is lower, which shows up in terms of lower trend growth. So in terms of policies, I guess it means that the region, is already operating. Many of them are already operating at output level, which are, have closed the output level. So in terms of space, there's not that much left in terms of cyclical space, for them to expand faster. So they need to work harder on the structural reform in order to boost the underlying productivity growth. So these are our main takeaway. We expect the region to strengthen this year, basically underpinned by resilient domestic demand and stronger external demand. And we expect export to improve, benefiting from the upswing in the semiconductor cycle, the rotation in goods consumption in the US, and also the continued recovery in tourism. And inflation is on track to moderate, although in some countries it's still relatively high. And also there's a shift in the drivers of growth, so I think central bank needs to be vigilant. And on the policy buffers, the fiscal buffers has been reduced, although our assessment is that they are still quite moderate. But you can see that the debt level has gone up, and therefore the space has been reduced. So that basically constrain policymakers in terms of their fiscal policy. And finally, we look at the trend growth, and you can see that even though we are growing much faster than the global economy, it's still below pre-pandemic level, and that's because capital formation was badly hit, and also not just capital formation, the balance sheet of many enterprises and households were affected, and that reduced the ability to spend, and on the government side, the debts are much higher. So again, spending on infrastructure is going to be lower. So our view is that the priority should be to reprioritize expenditure and for the enterprises to embrace technology and invest much more in the new technology to boost productivity growth. Let me stop here. Let me pass this to Alan, my colleague.
Thank you, Don.
Thank you so much, Dr. Khor. Let me now turn to the second part of the presentation. Now, given the relatively favorable near-term outlook that Dr. Khor has already outlined, we thought that it's a good opportunity for us to actually take a step back and look at the longer-term challenges that the region face. But before that, I think it's important for us to highlight that the ASEAN+3 region has experienced immense economic progress in the past 2 decades. It's a very significant contributor to global growth, like more than 40%. As mentioned by Dr. Khor just now, and it has also experienced not just higher, but also more stable growth compared to many other parts of the world. In fact, all economies in the region have now transitioned to at least middle income status, with China and Malaysia well positioned to reach the high income status by the end of this decade. But the pace of growth and productivity improvements in the region is slowing, and this has especially been apparent since the global financial crisis. I think more critically, this slowdown is also amidst an external environment that is increasingly uncertain. And then at the same time, as I said just now, we also face multiple structural headwinds. We actually conducted a survey on regional policymakers in last October, and 4 structural challenges were actually identified. They are the ongoing reconfiguration in global trade and investment, followed by climate change, rapid technological transformation, and population aging. Last year, we focused on climate change exclusively in our thematic chapter of our regional economic outlook. So this year, we are following through with the other 3. Now, aging is happening faster in ASEAN+3 than in many other parts of the world. As of 2023, in fact, the working populations of 9 regional economies have already peaked. In fact, the region's total working population is projected to start declining in the next 5 years. The key driver behind the region's aging trend is the declining fertility rates. The region's average fertility rate is only at 1.4 currently. This is well below the replacement level of 2.1. In fact, by 2035, all economies in the region are expected to have sub-replacement fertility rates, with the exception of only one, the Philippines. At current pace of aging, I think the problem of becoming old before becoming rich is a concern for many economies, especially the lower middle and middle income economies in the region, because this implies that these economies could have less resources to manage the challenges that aging brings. But one of the points that we try to make in our report is that despite aging happening faster in Malaysia, in the region, we can actually substantially delay and dampen economic headwinds from this aging. This is because while aging is happening, the population is also living much longer and healthier than in the past. If you allow for people who want to and able to continue to remain meaningfully productive at an older age, we could reap a longevity dividend. In our report, in fact, we estimated that if you take into account this older but healthier population, about 200 million workers can re-enter the region's labor force by 2050. This is not immaterial. This is larger than the entire labor force of Indonesia, for example, and it's akin to adding more than 10 times the labor force of Malaysia into the region. Allowing our population to age productively could delay the peak of working population share in the region until the next decade. But this outcome is not guaranteed. Policy will need to play a key role to ensure that the dividend from longevity materializes. We need to shift from merely responding to the challenges of aging to maximizing the benefits of an older but healthier workforce. Allowing our populations to age productively require a multi-pronged, multifaceted approach that encompasses various aspects of public policies, from labor policy, health policy, to urban planning, as well as in pension reforms, the use of technology, and of course, international cooperation for labor mobility. In our report, we go through this in quite detail. Here, I'm just providing an overview of some of our recommendations. Now, let me move on to the second key trend, that is on trade reconfiguration. Globally, we observe three key trends underpinning the changes in global trade landscape in the last decade. The one that we are most familiar with, of course, is the first one, which is the increasing role of geopolitics in the realignment of global trade. In particular, we have seen that growth in China-US trade is slowing, but their respective trade with the rest of the world is growing faster. Second, there are also signs that global trade has become more concentrated. More economies are now trading with fewer import and export partners compared to previous decades. Third, cross-border services has continued to increase in importance as a driver of globalization. I think this is one of the trends that is not well discussed, because what we have seen is that services trade is now growing considerably faster than cross-border trade in goods. Now, each of these trends is actually manifesting in the region. Firstly, ASEAN, in particular, have been able to benefit and position itself as an additional node between the US and China, with ASEAN continuing to increase its share as an indirect exporter of China's value added to the US. We have also seen ASEAN+3's imports and exports market portfolio becoming less diversified compared to previous decades. I think this is understandable given that we have much stronger intra-regional linkages, especially with China, but too high concentration may also reduce the resilience of our supply chains. Lastly, ASEAN+3 services export has also grown faster than goods, helped by the rise of digitally deliverable modern services. A point to highlight, however, is that the modern services export is only about 5% of that of total regional exports. So this suggests there's plenty of room for future growth. Now, while we have identified these trends, I think the fact is that the trajectory of globalization remains highly uncertain. Given this unclear landscape, it's crucial for economies in the region to identify and implement strategies that can reinforce growth and resilience regardless of the possible future, whether the world will be more fragmented or not. Right? In our report, we identified a few of these strategies. They include strategies to enhance domestic competitiveness and industrial capacity, to continue to expand trade and services, and to pursue broader economic integration in new markets and also in new products. We also devoted a section on technological change in the report. Technology has played a key role in driving growth in the region. It houses some of the most innovative economies in the world. However, there are significant heterogeneity across the ASEAN+3 with different technological and innovative capabilities within and between economies. Moving forward, technology will not only help to generate growth opportunities for the region, but it will also continue to unlock solutions to many of our structural challenges, including in aging, climate change, and trade resilience. What we need to do now is to have policies to encourage broader knowledge diffusion across economies, improve hard and soft infrastructure, and to reduce digital divide within and between economies. Now, given the growing interest on generative artificial intelligence, or Gen AI, we also took a look at the potential impact of this technology on the region. It is raising legitimate concerns about job displacement, but our preliminary assessment suggests that there could be a case for qualified optimism. We look at the exposure of the region's jobs to Gen AI given their task composition. Now, the intent is not to predict precise impact of Gen AI on jobs, but to provide insights on how the nature of jobs could potentially evolve given this technology. The good news is that we found that more jobs in the region are likely to be augmented rather than automated, but the impact will be uneven across skill levels and gender, with middle skill workers and women potentially more adversely affected. So therefore, policy should be shaped to create a supportive environment for those who are adversely affected, in order to make sure that the workforce will be prepared to make the most of Gen AI capabilities while minimizing inequalities. Let me now summarize our key messages. Without a doubt, the ASEAN+3 long-term growth path has become more complex. The rapid speed of aging in the region is raising doubts about the region's long-term growth prospects. But as we have highlighted, we also have an older but healthier population who can lead longer productive lives. We also highlighted the key trends that are driving the changes in the global trade landscape. Given the heightened uncertainty, there is a need to prioritize policies that are robust under multiple possible scenarios in the future. Thirdly, technology will continue to play an important role for ASEAN+3 as a solution and as a catalyst for change. But when it comes to Gen AI and similar technologies, a realistic, qualified and balanced approach is sensible at the moment. Let me end my presentation with a summary of our policy recommendation. For each trend, we actually have a very detailed policy discussion in the report. But among these policies, there are 4 common themes. These are 1, deepening in quality infrastructure. 2, encouraging innovation and knowledge diffusion. 3, promoting inclusion. And finally, 4, championing multilateral cooperation. Now, these underlying strategies will help reinforce the foundation upon which more specific policies can be built for each economy in the region to ultimately help the region navigate the future. Let me stop here. Thank you.
Thank you, Alan and Dr. Khor for the presentations. Now we'll start to take your questions. So for journalists joining us on WebEx, just a reminder again, please type your question in the chat box. For journalists in the room, please raise your hand and we will pass you the microphone. We actually have received some questions from reporters in advance. So let me start with a couple of them. It says the report is fairly optimistic on ASEAN+3 growth. What is underpinning your sentiment?
Thank you,
Yeah.
Daisy. Yeah, so I think in my presentation, I pointed out that we expect growth to be stronger this year. Last year turns out to be a weak, basically 2 reasons. One is a strong headwind last year, which was a drag on exports, and also because although consumption was very strong, investment was very strong, there was still inflation was relatively high, and also interest rates were relatively high, and there were drags from real estate sector as well. So this year we expect the external demand to be much stronger, and that is going to be put a boost for growth, particularly from semiconductor, tourism, and also goods consumption in the US, which I already mentioned. And also investment is likely to pick up because financial conditions have eased somewhat, and that provide a bit more breathing space for enterprises. And the labor market remains very strong, so I think consumption will remain relatively resilient this year. So because of all those factors, we expect growth this year to be somewhat stronger than last year. And we expect this to continue next year. Of course, there are a lot of risks which we identified, and if those materialize, they could derail our forecast for the year. Yeah.
Thank you, Dr. Khor. There's another question that we summarized on the regional outlook as well. So the question is, the report mentioned that growth has yet to recover to its pre-pandemic trend. Why is this the case? What can economists do to support a full recovery?
Yeah, again, I think I mentioned that we did a study, and I guess the short answer is scarring. So because of the pandemic, there was scarring on the capital formation, on the labor market, some of which rebound quite quickly. But in terms of capital formation, as you can see from my presentation earlier, capital formation was hit quite badly for some countries. And then going forward, fiscal space has been reduced, balance sheet has been damaged, much weaker than before. And for all those reasons, we expect that investment is going to be much weaker than pre-pandemic. So it's not surprising that trend growth will be weaker going forward.
Okay, thank you, Dr. Khor. I think we're ready to take questions from the floor. Yeah, please pass the mic. And please identify yourself and your organization, please.
Yeah, Thank you. I'm from the CCTV. And as we know that the Chinese government has proposed to develop the new quality productivity. So what role do you think the new quality productivity forces will play in promoting China's economic development and transformation? And the second question is, according to their report, China's economy will grow by 5.3% in 2024. So what are the main drivers of China's economic growth? And how will China's continued economic growth impact the growth of ASEAN+3 region? Thank you.
Thank you.
Yes, so I think in the two sessions that just took place, there was emphasis on the new productive forces. Our understanding of these new productive forces is basically to leverage on new breakthroughs in science, technology, apply them, to all aspects of production. And China has been doing that all along anyway. For instance, in agri-tech, I think China has been very aggressively applying technology to improve the productivity of the agriculture sector. Similarly, in industries, we see that a lot of factories are becoming automated, and they are applying new technology like Internet of Things, data analytics, and all these new technology to improve the productivity. And even in the services sector, right? E-commerce, we have the digital payment and all that. So I think it basically encapsulates what China has been doing, but maybe to do it more aggressively, and that's going to increase the productivity growth of the Chinese economy. And this is happening at a time when the population is aging and the labor force is declining. So I think it's very timely because it helps to offset the drag on growth from demographic from the aging population. So let me stop here.
Thank you.
On the second question about our growth forecast, which is on 5.3, and I know that is at the high end of most consensus forecasts. We are relatively optimistic because in our view, last year was still a weak year. Even though growth was 5.3%, but that was very much driven by the last quarter, as you know, when growth. So for this year, as I mentioned, we think the external environment is more favorable. The headwind has sort of subsided, and we see that export has already increased very sharply. The latest PMI numbers, show very strong manufacturing services number. Yeah, both above 50, right? Which means that they are now growing again. So we think that first quarter of this year is likely to be very strong, maybe even higher than our 5.3%. Going forward, we think it can be sustained, but of course there could be risks that happen. There is a drag on growth on the Chinese economy, which is the real estate sector, right? And that continues to be a drag, but the drag is diminishing over time. How long it's going to take, I guess we don't really. But I think there are some signs that maybe it's beginning to flatten off, and we might see some sign of recovery by the end of the year and next year. But in any case, as I mentioned, we expect this year to be driven by on the demand side by stronger export and also stronger consumption of goods. Goods consumption was also relatively weak last year because consumer sentiment was weak, but that is also turning around. So for all those reasons, we are relatively optimistic that growth this year can reach 5.3%. Yeah.
Thank you, Dr. Khor. We have another question from the Chinese media, but it is on more like regional and fiscal. Let me read the question. The Bank of Japan has raised interest rates, and central banks such as the Fed are also preparing to do so this year. What measures should be taken to stimulate the economy for the governments of the ASEAN+3 economies? Do they have enough fiscal room?
I mentioned that the fiscal space has shrunk, right? Because of the huge stimulus measure that was taken during the pandemic. Even so, our view is that there's still moderate fiscal space, but the space has been reduced because if you look at the public debt level has gone up for many countries, in fact most. by 10 to 20%. So that means that going forward, there's less room to increase the borrowing. Right? And many of the countries in the region are relatively prudent. They have set debt ceiling of about 65, 70%, and some of them are already at 60%. So, but in any case, so if there is a shock, we think that there is still enough fiscal room for them to use in order to offset the shock and support the economy. But because we are relatively optimistic about the growth of the region this year, we don't really see the need for fiscal support anyway. The emphasis this year should be on building up fiscal space. So we think that fiscal consolidation should be the priority. There may be a need for targeted fiscal support to some sectors of the economy, some groups that have fallen behind, But they should be more targeted, and then the priority also to shift towards investment in capital formation, building up the infrastructure for the new economies. Let me stop here.
Okay. Sorry to keep you waiting. We can take questions in the room, and we'll be taking questions on the WebEx very quickly. Yeah.
Hi. Hi, Dr. Khor, Alan. I'm Roche from the Business Times. My question is about monetary policy across ASEAN. So within ASEAN, right, do you foresee anyone cutting rates ahead of the Fed? And do you foresee anyone raising rates instead? Thank you.
On monetary policy, I think, as I mentioned, many are waiting for the Fed to move first. And that's because, currencies are weak, as you know. The US dollar is very strong. But fortunately, it's because the US dollar is strong and not because of particular currency issue, right? But even so, I think it puts pressure on policymakers because the exchange rate is weakening. It's just that they're generally weakening as a group. So many of them are still not very comfortable, easing, because that would mean that the exchange rate will come under greater pressure, right? And that's the reason why many of them, are on hold, right? In some countries, inflation is still quite high. Like in the case of Philippines, I think inflation is 3.7%, the latest number, even though core inflation has come off. And so it has not come, down low enough for the central bank to feel comfortable to ease the rate. Yeah. On the other hand, there are countries that have already eased, right? We know that China, Vietnam, for instance, last year, right? So countries are basically implementing policy according to their own circumstances, right? And if inflation do come down more, then I can see that some countries in the region will start to ease, right? One of them could be maybe even Thailand, right? Because there's a lot of pressure, as you know, and inflation is still quite low. So, whether they ease or hold or that would very much depend on the individual country inflation outlook. Yeah.
Okay, indeed, we got another question on the interest rate from the nation of Thailand, from Ms. Mintra. The question is it the right time to cut the interest rate? The Bank of Thailand's Monetary Policy Committee will have a meeting on April 10, but the commercial banks speculated that the interest rate will be unchanged. So is it the right time to cut the interest rate? And then the second question is, what would be the impact on the Thai economy if the government launches their digital wallet scheme in the last quarter of this year? So these two questions are on Thailand.
Well, Alan is the mission chief. So.
Thank you for the question. I think on the first question on monetary policy, what is really important is that for us to appreciate that the consideration for the change in interest rate in Thailand will be premised upon their assessment of three key things, right? The nature of inflation, the risk to growth, and for Thailand specifically on financial stability as well, the impact to financial stability. I think the first two aspects of this have evolved a bit compared to the last year. So growth has been turning up below expectation. Inflation has been surprising on the downside. So with this element, but the third factor on financial stability, household indebtedness continue to be quite high, right? So if we actually weigh these few factors, I think there is a case for the central bank to perhaps relook at the assessment carefully. I think for most of the analysts, they are actually looking at the consensus of perhaps a movement in April itself for the central bank. On the second point, what is key on the digital wallet implementation is really on the nature of how it will be financed. So I think that will be key. Suppose it is financed via the budget and they involve shifting of expenditure away from other form of spending, then the potential impact to the economy will be limited, right? For example, suppose spending shift away from, say, education or infrastructure to cash handout. This would have negative impact on the multiplier from the spending that is cut, and then the positive impact from cash transfer might be muted in that sense. So what is key is we have to see how the digital wallet scheme will be financed. I think the government will be looking at this on the 10th of April as well, coinciding with the MPC meeting as well. So that will be an interesting day for Thailand. Let me stop here.
Thank you. We got several questions on WebEx. Let me continue on some of them. So this is a question from a media in the Philippines, Business World, Ms. Beatrice Gertz. The question is, what was mentioned? It was mentioned that the semiconductor sector will be one of the main growth drivers in the ASEAN+3. What is your outlook for the Philippines semiconductor sector? What could be done to make the Philippine semiconductor sector more competitive? That's the question from Business World.
Interesting question. Unfortunately, I don't know the Philippine semiconductor sector well enough to be able to give a very precise answer. But I do know that the semiconductor cycle, from what I've seen, that the electronic industry in the Philippines is expected to do well this year, because I think the manufacturing sector in the Philippines is much smaller than the other ASEAN countries, but it still has a significant electronic sector industries, and that's expected to do well this year. Other than that, I cannot be very precise, but we'd be happy to give you a written answer on that one.
Thanks, Dr. Khor. There's another question on WebEx. We will go back on China. It's from the South China Morning Post. The reporter wants to ask how the lying flat trend in China is likely to impact economic growth in ASEAN+3 and in China particular. The lying flat trend, like people lying flat.
Oh. The Tanping is going to affect the rest of the world.
Yeah. So how this trend is likely to impact economic growth in ASEAN+3 and in China particularly?
Yeah, no, this is a very interesting phenomenon because I think it's among the youth, right? Unemployment rate is very high, and so many of them have sort of given up or decided they do something else, and so many of them have taken to what lying flat they call, right, Tanping. I don't think that's the case in the other ASEAN+3 economies, but I may be mistaken. It is definitely true that there are more opportunities in terms of career for the younger, the youth now and the new graduates than before during my time. And many of them have decided to move away from traditional career to a new type of career, in the entertainment industry, in gaming, in influencer. So those may not be well captured, and it's a certain lifestyle which is very different from the traditional lifestyle working in a factory, working in an office, 9 to 5, you know. So I would think that's probably a more likely description. So in that case, you know, we know that the gig economy, for instance, has blossomed during the pandemic because of the shutdown, and after the pandemic, it has continued to grow. You know, that I think it gives the flexibility that many young people are looking for as well. And I think that is one reason why, for instance, the labor market is so strong, you know, and unemployment is so low, because of the the ability of this new technology, digital technology, to do matching much better. But I think at the aggregate level, I doubt if this particular phenomenon, flying flat, will have a significant impact on growth. Yeah.
Thank you, Dr. Khor. We got several questions on ASEAN country online, but let me see if we have some more questions in the room first. Any question? Not now? Okay. Let me read another question from WebEx. It's from the Jakarta Globe, Nada. According to your report, Indonesia is expected to grow at 5.2% in both 2024 and 2025. Indonesia has just held its presidential election. I wonder if the change in the government will have a huge impact on Indonesia's growth. That's the question from Jakarta Globe.
Well, we've been following Indonesia very closely, and Indonesia has, you know, quite amazing in the sense that the growth rate has been always hovered around just a little bit above 5%, even, you know, through the pandemic. I mean, it sort of weakened a bit, but it's been growing at around 5.5 to 5.3% in that range, you know. And this new government that just came into office, you know, is very close to the current government. So we don't see, you know, that there will be a huge policy change from the current government to the next government, which is expected to take office in October, I think, August or October. Of course, the new government has its own priority, and, you know, has a long list of policy measures that you would like to take. Some of which, I guess, would depend very much on the ability to, you know, mobilize more revenue, because, you know, for instance, there's a free lunch for students, which is quite costly. On the other hand, I think the new government also has set an ambitious target to raise more revenue. So, you know, I think looking back at Indonesia's over the last several years, they've been very prudent in terms of the fiscal policy. As you know, in the last few years, they kept the fiscal deficit below 3%. And if they stick to the rule of fiscal 3% ceiling on fiscal policy, then that's going to constrain, you know, the ability to overspend unless they're able to mobilize more revenue. So our view is that as long as the macro economy remains relatively stable in terms of fiscal monetary policy, the economy can continue to grow at above 5%. But now is an opportunity for Indonesia to actually scale up in terms of its ability to attract more investment, especially into the new renewable energy, you know, electric batteries and electric vehicles. And we know that there's been actually a surge of FDI into Indonesia recently because of that. So that may help to boost the potential growth of Indonesia. You know? So they should rely much more on trying to attract more FDI inflows, you know, to complement their own natural domestic saving in order to, and also to embrace new technology to increase the productivity rate so that they can grow at a faster rate than.
Thank you. There's a question from Bernama on Malaysia. I think we have covered some of these in our presentation. Here's a question from Nur Ashkin. It was mentioned that you are optimistic that Malaysia can achieve high income nation by end of the decade. Is this likely by 2026? What are the driving factors behind this? Thank you.
Yes, indeed. Malaysia has set a target to, break through the middle income trap and become a high income economy by the end of the decade. And there's no reason why it cannot do that. Malaysia is actually very well placed in terms of attracting more FDI inflows. We visited actually the manufacturing sector in Penang and Johor. And we were quite impressed by how dynamic the manufacturing sector is. They are able to attract a lot of the, I guess, the semiconductor electronic factories, and also it's attractive because of it's English speaking. It is so our sense from our visit to those industrial zone and also from our is that Malaysia has a potential to ramp up its, reindustrialize and ramp up its manufacturing sector. At the same time, so if you look at the FDI inflows into Malaysia in the last few years, there was a spike in FDI inflows in 2021 and 2022, and that should be, begin to show up in terms of actual investment in the next few years. So we are optimistic that as long as they maintain the fiscal discipline, monetary discipline, the new inflows of investment from abroad, will be able to help them to raise the growth rate and reach the high income level that they aspire to. Yeah.
Mm-hmm. Okay. Another question on Malaysia, actually, to Mr. Ng. Mr. Ng mentioned earlier that the semiconductor down cycle bottomed out last year and is expected to continue its subsequent uptrend this year. When is this current upcycle expected to peak? For Alan.
So for Dr. Khor, it was in part one of the presentation.
The semiconductor cycle, yeah, I think Malaysia is quote unquote the Silicon Valley of the East. They have a large electronic sector there. Many of the semiconductor factories are there. Intel has been there for the last 40, 50 years, and they continue to attract more semiconductor industries there. So that's why they were very much affected by the downturn last year. But now with the upswing in the semiconductor cycle, they're likely to benefit. We think that the upswing has not peaked yet, and it's likely to peak only towards the end of this year. And so Malaysia will be a major beneficiary of this upturn in the semiconductor cycle. Yeah.
Okay.
I think maybe if I can just add on to the first question on the high income country status for Malaysia. Malaysia already have nominal GDP per capita of about 11 to 12 USD, right? 12,000 USD. In the current benchmark for World Bank for high income economy is about 13K, right? So it's very reasonable for us to expect Malaysia to be able to make that leap within this decade. But the more important point that we wanted to highlight in our report is that Malaysia, like many other regional countries, continue to face very significant structural headwinds. Crossing that line to become high income doesn't imply that you are a developed economy. You need to do a lot more to manage some of the structural headwinds that we face, right? Demographic concern is one of it for Malaysia. Productivity growth is also another element that would need to be managed well. And of course, there is a concern about also the workforce skill level and the likes. So these will be key things that Malaysia will need to look into, just like many other economies in our region. Thank you.
Okay. Let me see, Vietnam Television. I think Vietnam Television is in the room. It has submitted questions to us in advance. Yeah.
Yes, good morning. My name is Hưng from Vietnam Television. So the Vietnamese government set target for this year for GDP growth 6.5%, and your report is about 6%. So can you give some highlights about the positive side and some challenges of Vietnam this year and your recommendation?
Thank you.
Yeah, no, Vietnam is a star performer, as you know, when it comes to manufacturing. But because of that, it was hit quite badly last year because of the downturn in electronic manufacturing. And this year, it's going to benefit from the recovery in manufacturing. So we are optimistic that growth will be able to reach at least 6% this year, and maybe even higher, depending on how strong the upturn is. But Vietnam is also well positioned because it has attracted a lot of FDI, and this is partly because of the geo-fragmentation and the reconfiguration of trade and investment. So I think Vietnam is one of the favorite places for the China +1 strategy. Many of them are moving to ASEAN countries, to Vietnam, to Malaysia, to Thailand, and to Indonesia. And Vietnam has a really well-established ecosystem for manufacturing, and so many of them find Vietnam a very attractive place to invest in. So for this year, growth for Vietnam, I think our forecast is 6%. Is it 6 or 6.3? I forgot. Anyway, it's likely to be 6 or more than that, but it very much depends on the upswing in electronic cycle and also in manufacturing.
Thank you. There's another question on Vietnam. It's from Hanoi Times. How do you assess Vietnam's efforts in the green transition process, aiming to stay ahead of new trends in green growth and attract more foreign investors in the field, especially amidst increasing competition from other countries in the region? Is on the green transition process of Vietnam.
Yeah, no. As we all know, Vietnam has a very long coastline. And because of that, it's very vulnerable to climate change, extreme weather, which is likely to get worse with the climate change. So we think that Vietnam should invest more in terms of adaptation and investment to try to basically weatherproof, the infrastructure and also, so this is a vulnerability that Vietnam has because it's at the coastline where it can get hit by the typhoon very easily. On the other hand, Vietnam should also invest in mitigation strategy, and there's a lot of opportunities on mitigation strategy. As I mentioned, Vietnam is a favorite destination for investment, and the renewable energy industries is a new area. So Vietnam has the opportunity to attract a lot of those investment into Vietnam to help to spur growth in Vietnam. So it's a sort of a two-edged sword. There are costs, but there's also opportunities for Vietnam.
Thank you, Dr. Khor. We continue to get some more questions on the WebEx. There's a question from the Manila Times. Vika, I'd like to ask about AMRO's outlook for the Philippine economy and inflation for this year and next year. What are the main drivers of your outlook and the risks you are seeing? When do you expect the Philippine Central Bank to start easing, and by how many basis points? Thank you.
Yeah, Philippines, I think our forecast is 6.3% for this year. So it's lower than the official target. But to us, I think 6.3% is a very strong growth. It's among the highest in the region. And so Philippines will also benefit from the upswing, in terms of the external demand. And so, we mentioned earlier that the manufacturing sector will benefit from that, and also the recovery in tourism. I think I saw some report that for the first time, foreign tourism is contributing more to tourism than domestic tourism in the Philippines. On the inflation, on the policy side, as I mentioned also in my presentation, inflation is still on the high side, I think, and I think the government has expressed the view that they're going to wait until inflation has come off more before they start feel comfortable about easing. So when this is going to happen, we don't really know. I think there's a slight risk that this year, because of the synchronized upswing in the global economy, that inflationary pressure may actually be on the upside rather than on the downside. So it may slow down the moderation in the growth rate, in which case then it will delay any easing monetary policy. But this will affect not just the Philippines, but I think most central bank and even the US might be affected. Yeah.
Thank you. I think we only got time to address one or two more questions. Let me see if there are more questions in the room, and we'll take the last question online. More questions? No? Okay. I think the very last question is from China Business News on AI regulation. It's from Ms. Ya Gao of China Business News. In terms of AI regulation, what cooperation can ASEAN+3 have? A simple question, but it'll be a very long answer. Yeah, what cooperation can ASEAN+3 have in terms of AI regulation?
I think when it comes to AI regulation, some of the key things that we would need to recognize is actually a very fast evolving space, right? So one of the key things that we need to be done is actually for governments and policymakers to be able to appreciate where the direction of AI, for example, is going. And one of the key precise ways in which economies can cooperate and so on will be difficult for me to explain, but I think some of the key principles that we have in mind when we did the review on our work on Gen AI is actually twofold. One is that, well, while the impact could potentially be positive, it will be uneven, right? So any form of cooperation will need to make sure that the impact of the unevenness is mitigated somehow, right? Segments of the population that is affected more should be provided support for. Another part is actually the fact that we need to appreciate that from past historical experiences is that technological rollout is not exogenous, it's not a force of nature that we cannot influence, right? Technological progress is actually endogenous, depends on policy, depends on how businesses actually adopt it. So a key point actually is to make sure that the adoption of technology, especially for technology that could have impact on workers, is for it to be human-centered, right? Appreciating its impact on workers, impact on people that could be affected. So, and this actually comes to governance as well in terms of how it affects the values and the ethics of human. I think I'll stop here.
Actually, one very last question on Thailand again from the nation. How much of an impact is expected from Japan's investment repatriation to Thailand's economy? In what areas do you see the greatest potential for Thailand to innovate and adapt to the evolving economic landscape? What are the potential consequences of not doing so? A question from the nation.
All right, so I'll take this. I think for the first question on Japan and Thailand, I think it's very important for us to recognize that Japan continues to be a very important economic partner for Thailand. In FDI itself, the current stock of FDI in Thailand, 30% of that comes from Japan. And if we see some of the FDI inflows, for example, in the first few months of the year, the top contributor is actually Japan, right? So I think there is that we must have the recognition that Japan is a very important economic partner for Thailand, unlikely to change dramatically going forward. I think the second point to make is actually Thailand FDI portfolio has actually continuously become more diversified. We have more FDI coming from China, more FDI coming from ASEAN, and also outside of the region as well, from the US and so on. So this provides a resilience to the investment landscape in Thailand. On the second question, that is a very, very difficult question to answer in its totality. But I think I just want to make 3 points. Thailand has got many sectors that it has very strong comparative advantage in. For example, in tourism, in automotive, in agro, food manufacturing, for example. Moving forward, I think what it needs to do is actually to elevate these traditional strengths to the next level. Right? And the good thing is Thailand already has many of these necessary policy blueprints in place, and also a lot of the initiative that, for example, in the Eastern Economic Corridor and so on. I think what is key now is implementation and continuity in pursuing this policy. And on top of this, as what our report highlights, is that there are some structural weaknesses that Thailand will need to address. And some of this includes, for Thailand specifically, gap in infrastructure and also uneven economic development, especially in different parts of different provinces and so on. So yeah, let me stop here.
Thank you. Thank you, Dr. Khor and Alan, for your insights today. Ladies and gentlemen, we have now come to the end of today's press conference. You may visit the AMRO website to download the report and get summaries of the AREO in non-English languages and other materials. If we missed your questions, please contact AMRO's communications team. Once again, thank you for your participation, and we hope to see you again. Thank you.
Thank you.